Welcome back, good people. I'm Elena from Financialdemics, where I give you the tips and tools to manage your money, increase your savings and your income, and decrease your debt. And today we're talking about how compound interest works for you. So if you're looking to get your money right and build a strong financial foundation, then make sure you go ahead and click that subscribe link below so that you don't miss another one of my uploads. In my last video, I talked about the difference between simple interest and compound interest in the terms of paying off debt. But in this video, we're talking about how compound interest can actually help you make money. It was Albert Einstein that said that compound interest is the eighth wonder of the world. And that probably has something to do with the fact because compound interest can help you increase your wealth, but it also can help you go further into debt. From the investing perspective, compound interest is how your money makes money. So not only do you make money on the money that you initially invest, you also make money on the interest that you earned, which means the longer you invest, the more you may earn. So using the same example that I use in the simple interest versus compound interest video, which after this video, I'll link it here, definitely check it out. If you invested $1,000 and your average return is about 8% a year, then in the first year, you would earn $80. So in the second year, instead of earning $80 on $1,000, now you have $1,080. So you're gonna earn 8% on that, which is somewhere around $86. Then now you're gonna have that $180 plus that $86. So now you're gonna have somewhere around $1,166. And then in year 3, you're gonna earn 8% on that, which is approximately $93. So then now you're gonna add that $93 to the money you already have, which would give you around $1,260, and you're gonna earn 8% on that, which is about $101. And then you're gonna add that to the money you already have. So then your balance is around $1,360, and you're gonna earn 8% on that. So in year 5, you're gonna earn around $108 for the year in just interest, right? You should have a balance that is somewhere around $1,469. And that's in 5 years, and you actually did not invest more money. So in 50 years, if you never invested a single dime but that initial $1,000 with an average annual return of 8%, you would have about $47,000. Now let's think about if you actually continue to invest in addition to your $1,000 initial investment. So let's just say you could only put in an extra $100 a month after you put in your $1,000. In 50 years, you would have approximately $735,000. And yeah, 50 years seems like a long time, but I mean, even if you said 30, it's still less money, but it's still the power of compound interest. Because if you do the math, you didn't put in $735,000. You put in less. But because of compound interest, you're able to earn more because you're earning interest on your interest. So that's why it's important to start investing early, because then you're able to have a longer time frame to earn money due to compound interest. And the longer you invest and the more you're investing, and even if you let your dividends that you earn on what you invested reinvest into your account, it can really add to the pot over time. So some of the ways that you can actually earn compound interest is through your bank. Now, this is not a way that's going to give you a lot of interest, but there are checking accounts, savings accounts, money markets, and CDs that do pay interest. So it's a little bit of interest, right? And you can also do it through investing, whether it be through the stock market, so individual stocks or mutual funds, options, there's so many different ways that you can actually invest, but don't look past the point that even if you don't feel like you have a lot of money to start right now, there are a lot of companies out there that let you buy fractional shares. You can also invest through your company's 401k or 403b program, and they may even give you the option, and it's normally for higher earners, but you may have the option to invest in a 457b. And then you also are able to invest in your retirement through an individual retirement account. Most people prefer Roths because of the tax advantage of them, but there's also the traditional IRA, which you should know about it because it can benefit you in some ways. And so you have those options to gain compound interest. And then you also have the option to earn compound interest through real estate investing. It can benefit you through the appreciation of the actual property that you're investing in. Now, granted, this is a long-term process of gaining compound interest just because of the way the real estate market appreciates. But then you also can do that through increased rents. So as your rents increase on the properties that you are renting out, you can use those additional funds to put more money down on paying off the property so that you can cash flow the property, which benefits you also because you may be able to use that difference between what you owe and what it's actually worth to invest in more properties. In the comments below, let me know how you want to earn your compound interest. Do you want to take on a little less risk and do it through your bank? Do you want to invest in the stock market? Do you want to invest in real estate? Or do you want to do all three? If this video was helpful for you, please give it a thumbs up. That'll help get the video out to more people so they can learn exactly what you are learning. Also, if you enjoyed this video and you're not subscribed, go ahead and subscribe to the channel and share it with your friends. And I'll see you next time with an all new video.